consumer confidence is stronger than it has ever been. Several social, political, and economic movements have placed climate change at the forefront of their agendas. The electric vehicle sector is capitalizing on this enthusiasm to position itself as a source of clean energy and a combatant of climate change. The popularity of electric vehicles increased as a result of higher subsidies and positive customer sentiment. This was the reason why climate change coverage reached its greatest level in more than a decade in 2019. Reporters in the news talk about an electric future on a regular basis and remind the public of the damages of climate change through coverage of various movements and public support from well-known personalities, which ended up creating hype around EV manufacturers. In today's video, we'll talk about the relatively high valuation of the electric vehicle stock in IPOs, factors that are contributing to it, and whether or not the bubble itself actually exists. Stay tuned. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in upcoming videos. Herbert Diess, the Chief Executive Officer of Volkswagen AG, has projected that the world's most valuable firm will be an automaker within the next 5 to 10 years. The amount of money that investors are willing to spend on shares of Tesla Inc. and other electric vehicle stocks suggests that it may happen sooner rather than later. However, is the recent expansion truly sustainable? Or is it just a euphoria-fueled bubble inflating during one of the world's most precarious periods since the Great Depression? Although the EV revolution is just starting, investors should be mindful of events in the automotive industry in recent years with similar revolutionary technology. Tesla's market capitalization surpassed $750 billion in mid-September 2021, which is equivalent to 140 times the company's estimated earnings for the year, making it one of the world's most valuable publicly traded corporations. A trio of Chinese electric vehicle companies listed on the NYSE, NIO, XPeng, and Li Auto, none of which are profitable, and it's only projected that they'll become profitable in the future, still are worth a combined $325 billion. The electric revolution is genuine, and the shift away from combustion engines is speeding up at an alarming rate. From the standpoint of the environment, it's fantastic that investors are allocating cash in this manner. Nonetheless, valuations appear to be extremely inflated. The likelihood of being disappointed is extremely high, particularly for the newest generation of electric vehicle manufacturers that have yet to earn significant income. NIO's recent history demonstrates the dangers of investing in electric vehicle stocks. It issued a warning back in March 2020, stating that it had quote-unquote serious uncertainty about its capacity to continue as a growing concern after burning through $4 billion in cash in the past 3 years. It was only able to survive because of the local government support. Since 2003, Tesla also has been on the verge of declaring bankruptcy at least twice. Those who are now competing in the electric race claim to have learned valuable lessons from near-death experiences, but there is little evidence to suggest that their futures will be any less volatile. Then there's 2020's hottest financial trend, SPACs. The majority of these have merged with electric vehicle firms, and one characteristic of these transactions is that the companies involved are permitted to publish comprehensive, multi-year financial predictions, unlike in a traditional IPO. These forecasts are frequently quite bullish in nature. Even Elon Musk is concerned about the rise of SPACs. Arrival Limited, a UK-based electric bus and van business that went public by merging with an SPAC in March 2021, was valued at nearly $13 billion after the SPAC's shares more than doubled in a week following the announcement. Despite the fact it will not begin car production until late in 2021, it was highly valued at the time. According to reports, Rivian has filed for an IPO and plans to go public around Thanksgiving this year in 2021 if it receives clearance from the SEC. In a report published by Bloomberg, the electric vehicle firm is seeking a valuation of roughly $80 billion, which represents a significant increase from the $27.6 billion it received when obtaining fresh cash from T. Rowe Price, Fidelity Investments, and Amazon earlier in 2021. The $80 billion threshold is also larger than the market capitalization of NIO's $61 billion, Fisker's $3.7 billion, Canoo's $1.5 billion combined. It's worth noting that Ford was one of the first investors in Rivian Technologies. In this tremendously skewed bubble of a market, a company's stock price and its underlying value have been dissociated to a higher degree than we have seen since the dot-com bubble. This is particularly true with these IPOs. What powers the EV bubble? Several reasons have contributed to the astronomical rise in the value of electric vehicle stocks. The Federal Reserve of the United States has sparked a speculative frenzy by reducing interest rates to zero, and bored youngsters trading stocks at home on Robinhood have caught the EV hook. Through Robinhood, access to stocks has been made as simple as it has ever been, but this has come at the expense of a large number of individuals overhyping companies and driving their prices up with little to no basis in fact. Additionally, investors can invest in fractional shares, which allow them to own a portion of a stock for as little as $1 if they can't afford to purchase the full stock at once. Secondly, electric vehicle manufacturers now know how to promote themselves to this demographic. For instance, Workhorse Group Inc. states that its delivery vans can be paired with a drone, whereas XPeng highlights its self-driving capabilities in its marketing materials. The Solo model from Electromechanica Vehicles Corp. is a three-wheeled vehicle, and Lucid with the most miles on a single charge. With the rise in market enthusiasm, crazy financial valuations on practically every parameter, and amateurs putting their trust in dangerous assets, it is difficult to assess whether or not a bubble has formed in the financial markets. In light of the foregoing, the Federal Reserve is devoting all of its efforts to keeping the financial markets stable. After all is said and done, whether or not EV valuations are justifiable is dependent on the answers to two questions. First, will the Federal Reserve continue to support public markets aggressively? Second, how patient will investors be with businesses that aren't generating any revenue? Only time will tell if this is true. Conclusion: all of this extreme valuation may have short sellers licking their lips, but Tesla's growth demonstrates the danger of betting against a bubble when it comes to stocks. Nikola was the subject of a damning investigation by Hindenburg Research that called into doubt its technology and resulted in the resignation of the company's chairman. Despite this, its market valuation has risen to more than $4.1 billion. Just because the natural gas revolution failed and self-driving cars were overhyped does not rule out the possibility of electric vehicles becoming more widely used. Tesla has unquestionably created a marketplace product that is in high demand, and concerns about climate change are becoming more widespread. As a result, the stock prices of these companies have surged to such high levels that the entire industry now appears to be priced for perfection, similar to how self-driving cars were valued several years ago. Tesla's market capitalization alone eclipses the combined market capitalizations of General Motors, Ford, Fiat Chrysler, Honda, and Volkswagen. However, when investing in a risky security, investors must seek ways to diversify their portfolios. What are your thoughts? Is the EV industry experiencing a stock market bubble? Is it capable of causing a depression in the same way that the dot-com bubble and the housing bubble did in the past? Let us know your thoughts in the comments section. When it comes to portfolio diversification, Electric Man has the right idea. In contrast to most investors, he's chosen to diversify his portfolio by investing in a number of different companies. That should wrap things up for today. Keep in mind that subscribing is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.